Have you ever wondered what's driving super investors to load up on dividend stocks? These financial titans aren't just making casual investments. Guess what? They're strategically positioning themselves to harness the power of dividends. But why should you care? Well, dividends aren't just passive income. They're a sign of stability and growth potential. When super investors get big on dividend stocks, like those we're about to explore, they're signaling confidence in long-term returns and weathering market storms. And for the everyday investor, understanding their moves could be the key to unlocking hidden gems in the market. So, what are the secret stocks you're missing out on? Well, let's get started. 1. Microsoft. As a multinational technology giant founded in 1975 by Bill Gates and Paul Allen, Microsoft Corporation has carved its niche in the hearts of personal computer users worldwide. Headquartered in Redmond, Washington, Microsoft is synonymous with software products like the ubiquitous Microsoft Windows operating system and the ever-reliable Microsoft Office suite. Beyond software, Microsoft boasts a strong history of rewarding its shareholders through dividends. As of April 2024, MSFT offers a dividend yield of 0.73%, translating to a yearly dividend of $3 per share. This commitment to shareholders' returns is evident in their 19-year streak of consecutive dividend increases, solidifying their reputation as a dependable income-generating stock. Investors receive quarterly payouts of 75 cents per share, with the next ex-dividend date being May 15, 2024. Truly, their dedication to dividend growth is commendable. Their one-year dividend growth rate sits at an impressive 10.15%, April 2024, and a payout ratio of 27.12% indicates a sustainable level of dividend distribution. This is further emphasized by their shareholder yield of 0.78%, which combines dividends and share buybacks, demonstrating their commitment to returning value to shareholders. Now, let's rewind a little bit. You see, the company's dividend history stretches back to 2003 with an initial payout of $0.08 per share. Since then, they've consistently increased dividends, occasionally offering special payouts like the $3 distributed in November 2004. For those seeking even deeper investments, Microsoft partners with ComputerShare, their transfer agent, to administer a direct stock purchase plan and dividend reinvestment plan. Looking beyond dividends, MSFT stock price has exhibited strong performance over the years, with a closing price of $413.64 on April 15, 2024, and a market capitalization exceeding $2 trillion. Microsoft stands tall as one of the world's leading companies. However, Microsoft's success story isn't limited to software. Their business strategy encompasses software development, hardware manufacturing, and the ever-growing realm of cloud services. Their flagship product, Microsoft Windows, remains a global phenomenon, powering millions of computers worldwide. Similarly, Microsoft Office applications like Word, Excel, and PowerPoint have become staples in both homes and offices. In recent years, Microsoft's cloud service division, Azure, has emerged as a significant growth engine. Azure offers a comprehensive suite of cloud computing solutions, including infrastructures as a service, platform as a service, and software as a service. Moreover, Microsoft has capitalized on strategic acquisitions to fuel its growth. Companies like LinkedIn, GitHub, and Skype have been brought under their umbrella, expanding their product portfolio and strengthening their presence in various markets. 2. Visa. Now, as a dominant force in the global payments arena, Visa facilitates electronic transactions between a vast network of consumers, merchants, financial institutions, and governments. Their reach extends across more than 200 countries and territories, solidifying their position as one of the world's largest payment processing networks. Their commitment to rewarding shareholders is evident in its dividend history. As of April 2024, they boast a dividend yield of 0.61%, translating to $1.44 annually per share. This dedication is further underscored by their impressive 14-year streak of consecutive dividend increases, solidifying their reputation as a reliable income-generating stock. Investors receive quarterly payouts of 36 cents per share, with the next ex-dividend date being May 5th, 2024. Their dividend growth is commendable. With a 1-year growth rate of 17.65%, this financial prudence is further emphasized by their shareholder yield of 0.65%, which combines dividends and share buybacks, demonstrating their commitment to shareholder returns. The foundation of Visa's success lies in transaction processing fees, collected from merchants and financial institutions for each electronic payment coursing through their network. Their revenue growth is fueled by the ever-increasing adoption of electronic payments, particularly in developing economies. Strategic acquisitions have also been a cornerstone of Visa's growth strategy. Companies like Visa Europe and EarthSport have been brought under their umbrella, expanding their product portfolio and strengthening their presence in various markets. Visa's competitive edge stems from its global network and unparalleled brand recognition. Their network is one of the largest and most widely accepted globally, solidifying their presence in numerous markets. The Visa brand is synonymous with trust and reliability within the payments industry. Its financial performance paints a promising picture. In 2023, they achieved an impressive 11% growth in revenue and a 13% increase in net income. Their healthy financial standing is further reflected in their gross profit margin of 64.5% and operating margin of 40.5%, both exceptionally high within the payments processing sector. With a low payout ratio and strong financials, Visa's dividend growth potential is enticing. The low payout ratio indicates ample room for future dividend increases. 3. Apple. They are a titan in the technology world. They do designs, develop and sell a captivating array of consumer electronics, computer software, and online services. Their reach extends far and wide, solidifying their position as one of the world's leading technology companies by both revenue and market capitalization. Their reputation is intrinsically linked to its iconic products: the iPhone, iPad, Mac computers, Apple Watch, and Apple TV. However, their offerings extend beyond hardware, encompassing a robust suite of services such as the App Store, Apple Music, iCloud, Apple Pay, and Apple Care. As of April 2024, they boast a dividend yield of 0.56%, translating to $0.96 annually per share. This dedication is underscored by their impressive 12-year streak of consecutive dividend increases, solidifying their reputation as a reliable income-generating stock. Investors receive quarterly payouts, with the most recent one being $0.24 per share, distributed on February 9th, 2024. While the iPhone remains a cornerstone of Apple's success, its service segment has emerged as a major growth engine. This segment encompasses cloud services, the App Store, Apple Music, Apple Care, Apple Pay, licensing, and more. Non-iPhone devices like the Apple Watch and AirPods have also gained significant traction, solidifying Apple's dominance in the wearables and wearables market. The strong adoption of the Apple Watch further positions them as a player in the personal health monitoring space. Beyond these wearables, Apple designs, manufactures, and sells iPads, MacBooks, and HomePods. These devices operate seamlessly thanks to software applications like iOS, Mac OS, Watch OS, and TV OS. 4. General Motors Company. As a household name synonymous with automobiles, General Motors Company is an American multinational giant in the automotive manufacturing industry. Their global reach encompasses the design, development, and sales of trucks, cars, crossovers, and automobile parts. They have carved a niche for themselves as one of the world's leading automakers, with a rich heritage of innovation and industry leadership. When it comes to dividends, General Motors presents a somewhat complex picture. Their current dividend payout ratio is low, indicating a minimal portion of their earnings is distributed as dividends. A similar pattern emerges when examining dividend yield. Currently, the yield is around 1.02%, but this figure can vary. Past performance has seen yields as high as 8.43% and lows of 0.22%. The median sits at 3.90%. Their most recent annual dividend is $0.48 per share, translating to 1.12% yield. Their dividend growth is another interesting aspect. Over the past year, dividends per share has exhibited a staggering 300% growth rate. However, zooming out of the past 3 years reveals a negative growth rate of minus 50.90%. However, looking even further back, past 5 years, a modest growth rate of 8.20% emerges. This volatility highlights the inconsistency in GM's dividend history. But looking deeper, there is a solid potential company one should look into. Now, with a commitment to launch 30 new global electric vehicles by 2025, GM isn't just adopting to the electric revolution, they're leading the charge. This ambition is powered by Ultium, a proprietary battery technology which promises not only greater range and efficiency, but also versatility across different vehicle models. Investing in GM today means investing in a future where your vehicle is likely to be smarter, cleaner, and more connected. But GM's potential stretches beyond just electrification. Their vision for the future indicates a heavy emphasis on autonomous driving technologies and mobility services. Imagine a world where cars drive themselves, reducing accidents, congestion, and emissions. GM is actively working to bring this vision to life through investments in Cruise, their majority-owned autonomous vehicle subsidiary. The firm is not merely responding to technological trends, but is actively shaping a future where they remain at the forefront of the automotive industry. For anyone looking to invest in a company that is not just surviving, but thriving in the area of smart technology, GM makes a compelling case. It has the potential. 5. Bank of America Corporation. It is a titan in the financial services industry with its headquarters in Charlotte, North Carolina. Their global reach extends to individuals, businesses, and institutions, offering a comprehensive array of financial products and services. Encompassing banking, lending, investment management, and wealth management, BAC stands as a multifaceted financial powerhouse. A core tenet of BAC's philosophy is rewarding shareholders through dividends. As of April 2024, their dividend yield sits around 2.77%, translating to $0.96 annually per share. This commitment is underscored by their impressive 14-year streak of consecutive dividend increases, solidifying their reputation as a reliable income-generating stock. Simply, BAC is a reliable, dividend-paying stock with a long history of increasing dividends. The company's business is diverse and includes financial services. BAC's financial performance has been strong, with high revenue and profit growth in recent years. The company's dividend growth potential is also promising, with a low payout ratio and a strong financial position. And that's all. So, are you ready to follow in the footsteps of these super investors and supercharge your portfolio with dividend stocks? And, well, which one would you be considering? Comment down below. Also, leave a like, subscribe, and don't forget to turn on the notification bell.